So I noticed last time, right, certain banks in the month of, say, for example, September,
Yes.
2 banks has the best rate.
Yes.
Then another 2 banks, the rate really cannot compare.
Yes.
Then I asked, how come your bank, how come all got different rates? Or maybe you wait until next month, we got better rates.
Hello everybody, welcome back to another episode of Property Roundtable with myself and Rama, bringing value to your journey in buying and selling a landed property in Singapore and other types of properties as well.
Also in Singapore.
Okay, today another age-old favorite update, which is interest rates. Okay, very recently, the Feds have cut rates by 25 basis points. That's a fact.
That's a fact.
That's a fact. So this is the first cut that has happened in the last 1 year.
Right.
And this is the first time in the history of US, no, this is not the first time, this is the third time in US history that the Feds have cut rates when S&P is at its historical high. So what does it mean? And what is this Fed, right? We always talk about Fed, right?
As a matter of fact, I should be the one asking the questions here because this is right down your alley,
yes,
hubby. All right?
Yeah, right down my
what
alley.
does that mean? I should be the one asking.
Okay, come.
Yeah.
Ask.
What does that mean?
Okay, so, the Fed, right? Not FBI, the Fed, right? Where they control the monetary, when called interest rates, right? It's used to manage two things.
Yep.
One is to manage inflation. Two is to manage the labor market. So at this juncture, they've did a cut because they feel that the labor market is not doing too well. But for us, right, as on this side of the world, generally, right, what we just want to know is what is the true impact for us.
Right.
So in simpler terms, right, when interest rates come off, right, a lot of things get better.
Right.
People can borrow at a lower cost, which fuels businesses.
Yep.
People can borrow at lower cost, which makes mortgage payments lower.
Right.
So in a direct reaction to this news in US, the favored industry that will do well is actually real estate and finance because these two industries favor a lower interest rate environment because it's cheaper to do things.
Right.
Okay.
But why is it always we have to benchmark with the Feds and the US?
Yeah.
Why them?
Because they determine the yields, like the bond yields, right? They also determine the borrowing cost, right? Which in our sense, actually Singapore, Sing dollar is actually marked against a basket of major currencies. It is not specific to USD, but it does impact our SORA rates, which is overnight rates, borrowing rates. So last time we used to have SIBOR, Singapore interbank borrowing rates, which are actually directly impacted by the Fed interest rates as well.
Right.
But even with SORA is the same. Our markets do get affected by news like that.
Okay.
So if you read the news, it will be a very welcome move. Given the last year, right, some of interest rates for mortgages were as high as 3%.
Yep.
So this is a welcome thing in that there's anticipation that there'll be another 2 more rate cuts this year as well.
Right.
So that's why this news is important to us.
I think one of our previous episodes, right, we were talking about how interest rate, when it goes down, the amount of savings people get.
Yes, correct.
Remember?
Correct.
So we were talking about people who are ready to move into the market because now what they couldn't afford earlier, they can afford now.
Yes.
But my question to you now
Yeah.
is about people who already in the market.
Okay.
Okay? So they got in most probably at a higher interest rate.
Yes.
Today lah.
Yes.
Okay, and the holding period should be 3 years lah because the asset 4 years just came in, right?
Yes.
So what about these people? So they must be happy, right?
I would say that whilst they entered the market when the interest rates were higher, which means that on a monthly basis, there's more, whatever they pay out in mortgage, more goes to interest cost than principal.
Does that mean they can go for more holidays?
No, it just means that if you are not very aware of what you're paying, maybe it's time to figure out how much goes to principal and how much goes to interest. And if you are able to reprice your package, right, moving forward in the next 1 or 2 quarters,
Yeah,
right,
that's what I wanted to hear.
it
about
will
what they do, yeah.
it will help you in your interest cost savings.
So the word is reprice.
Reprice or refi if you're allowed to, refinance to another bank. Reprice is always done within your bank. That means you still stay with the same lender, but you renegotiate for a new rate. Obviously, your timeline will start again.
So at this juncture, right, one of the questions that I get from some of the clients,
Yes.
okay, which bank should I go to? Because sometimes, right,
Yeah.
like you go for shopping,
Yes.
then got promotion, got
Yes.
sale.
Yes.
So I noticed last time, right, certain banks in the month of, say, for example, September,
Yes.
2 banks has the best rate.
Yes.
Then another 2 banks, the rate really cannot compare.
Yes.
Then I ask, how come your bank, how come all got different rates? Or maybe you wait until next month, we got better
Yeah.
rates.
Yeah. Time and space. Obviously, lending money is also a business. So how the business decides to give certain packages depends on their strategy, depends on the need for this business. But of course, moving forward with interest rates coming off, right, there will be a big merry-go-round. I mean, consumers will go around shopping. They will, banks will try to retain customers through a more competitive reprice.
Sometimes I wonder,
Yeah.
these banks, they all like in cahoots or not? Never mind, this month you take, next month I take.
No lah, bro. They are not in cahoots lah. Just like some agent, they charge customer 1,999, 2,999 because they feel that that is the amount that they well deserve ma. But then would you say that they are in cahoots with the other agents to make themselves more competitive? No lah.
Right.
It is what at a time and space they feel that that's them being competitive. Albeit, obviously for loans, all banks that are lending money, they are more than qualified to do the job. So
Right.
I guess it's really up to you, like which banks you want to go to lah.
Right.
Yeah.
So considering the fact that the interest rate has gone lower now,
Yes.
or rather in the down,
It's in that direction,
Right.
downward trend.
do you personally feel the sellers who are currently holding on to the landed property would either be happy and move forward,
Yes.
or they say right now is my time to sell?
You know, Singapore, I mean, it celebrated 60 years of independence. Obviously, we've seen certain market cycles. In the more memorable years, right? For example, during 2008, there was the Lehman crisis, and then in most recent times, COVID. And in these periods, interest rates were really low because when economies are so-called not doing well, the rates are cut to boost spending, which does cause some form of inflation. And when interest rates come off, right, in the most recent times we saw in COVID, right, asset inflation happens. So your question is, if let's say today I'm a landed owner, what can I do or what should I do?
Right.
Actually, it depends on your strategy. If you feel that this is a good time for you to go into a savings mode, then go and reprice your loan.
Savings mode.
Yeah. If you want to go aggressive, you say this is a good time to pick up quality assets, quality investments with the potential to outgrow what you're currently sitting on.
As in you are upgrading to a bigger...
Yes.
All right.
It doesn't even have to be an upgrade. It can be a decoupling strategy where you take equity out from your current property and you buy something different.
Right.
For example, you can look at office, can look at industrial. Or you can recycle, that means you sell your current position and move up the value chain to find something that allows you to take a bigger growth in terms of potential value. Like recently I met an owner, D19, owns a semi-D. Semi-D is more than suffice. But he has that aspiration to move into a bigger position because he says, hey, Harvey, I can still do one more round.
That's what this channel is all about,
Yeah.
bro.
He said can do one more round, right? One more round meaning that he wants to recycle his profit. He wants to take a bigger position given that we both agreed that I mentioned that interest rates are coming off.
Yep.
Coming down, he does make more sense to go into a bigger loan position,
Right.
which is probably going to cost him the same every month.
So number 2, can I say restructuring?
Yes.
All right. So anything else? Number 3?
So there will also be buyers, right? Because if you have not taken a position in the last 1 year, 2 years, and your friends keep telling you, say, all these things very expensive, right? Just wait for market to correct. So unfortunately, the narrative doesn't work in your favor right now because with rates coming down, and asset inflation potentially likely to happen. These are based on trends, past trends, right? Then you are now in a situation whereby you should be more active in trying to buy something already.
Right.
Because it's just not helping if cost of financing or loans coming down, right? Means that it's going to be cheaper to take on a loan.
Right.
Then more people will want to buy,
Correct.
because now it's cheaper to own a loan, right? Yeah. So I think for buyers, they should start to wake up in the morning and say that, and really bury their head and think, should I really make the next move?
Correct.
Should I talk to Rama and Harvey and make the next move? The answer is yes, lah.
So number 4 lah.
Yeah.
I think the number 4 lah.
Okay.
That's the easiest one.
Yeah.
You just stay put lor.
Stay put.
Don't do anything lor.
Indifferent.
Yep.
Indifferent is not a bad thing as well, because your value of your property should also move. Nothing moves in silos, lah, right? So if interest rates come off, I mean it will. I as mentioned, and with more liquidity coming, because when interest rates come off, that does an impact to USD. For safety's sake, a lot of them may convert USD. The more sophisticated institutions or like family offices, they will move into the Sing dollar for a stable growth. With that liquidity coming in as well, fueling the market, it should bring the market to another level, meaning prices may escalate.
So, talking about keeping still,
Yeah.
all right? If you're a seller today, right?
Yes.
Or rather, if you're a buyer today,
Yeah.
okay, all your numbers will change. Even as a seller, your numbers change.
Yes.
Because most of them are looking at your monthly installments as compared to what's the rental yield or rental amount that you can get.
Yeah.
So with the drop in interest rates, the numbers change, right? And with these numbers, now you can actually invite buyers to come into the market to buy your space.
Yeah.
Imagine you're a seller at this point, not a freehold seller, but a 99-year leasehold seller.
Yeah.
I think that will be an excellent time for you to sell.
Yeah, correct. I think the market will always take certain news and react. But when interest rates change, it has a direct impact on the borrowing cost of buyers and sellers, right? It forms many moves in the market, because this is one thing that is directly impacting down to the last consumer in terms of borrowing costs. It is not a macro policy whereby you say, oh, your seller stamp duty period increases from 3 years to 4 years. That doesn't impact the original group of people who are already in a position. So it's no reaction for them. It's only for the new buyers. They have to take note of this point. So such news affects the buying activity and the mindset of the new buyers only. But when interest rates move, it's a macro move. That means across global markets, stock markets move, right? When stock markets do better, what do people do? They feel good, they sell out, take profit, and they want to put it into something that's more stable, which is probably real estate. So when such news happens, which is on a very global and macro level, right, the direct impact down to the last consumer does move markets. So if you want to know what this news ultimately runs into, right, it means that you got to start planning. If you have the mindset to do something, maybe the time is now. You still have time to do so, because they have mentioned another 2 rate cuts this year, meaning that it could be as high as 1%, which is unlikely, total 1%, or it could be as low as 0.5, which is 50 pips, right? So we all know the general direction this year could be as high as 1.25% cut, or it could be as low as 0.75% cut. But it's definitely cut. So if you are going to do something, it's best to start planning now to prepare ahead of the market.
So I got a question.
Yeah.
As always.
Yes.
Okay. I've heard of this term called bankers.
Yes.
Then there's this mortgage brokers.
Yes.
So now I'm going to throw you a question which we never discuss,
Yes.
which I usually do.
Yes.
Why is it important to talk to Harvey
Yeah.
as compared to a mortgage broker?
Why?
Why?
I think finding rates in the market is a marketplace, and you can do so with or without a mortgage banker or broker per se, right? But they give you that convenience, they come to you and give you all that numbers perspective, right? But then it's only on the loan portion. At the table, right, what we want to bring to our clients, right, it's a proactive strategy of trying to do something ahead of the market. repricing, refinancing, all these things are these are defensive moves which help you in your savings.
Yep.
But when you buy something and you want to secure a loan package, right? The primary objective is that you want to buy something right. You want to buy something that will work for you in future. Values do go up. And then as a value add, right, we find the best packages for you in terms of loan.
Correct.
So we do a one-stop shop. We can do everything. So it's not just about talking to Harvey. I think it's talking to both myself and Rama at the table, what we can bring value to you.
I mean, it's amazing, bro. Thanks for answering that question with a lot of conviction. You know why I asked you that question?
Why, bro?
Because I also see brokers now talking about property.
Oh, I see.
Yeah, so I was wondering, why is it nothing wrong, property agents?
Yeah, I mean,
Yeah.
a food blogger can talk about food. A master chef can talk about food.
Mm.
And anyone at a kopitiam can also say whether something tastes good or not.
Yep.
But the nature of what comes out from the chef is he understands the process of how this is done and what can be done better. The food blogger talks about the visuals as well as the price points, right? And it addresses different pain points. And obviously, the consumer can say, I like or I don't like because of his mood or whatever. So our role is we are like the master chef.
Yep.
We understand the raw material, we understand the nature of the industry, then we understand how things are priced and how in future, how we can upsell this product all the way down to the value chain, right?
Yep.
So I think that's the difference. Yeah.
I think one of the examples that I like to bring to your attention is, again, it's not part of this particular episode, but
Yes.
we did have a discussion about this just a while
Yeah.
ago, that you had a client, or rather a viewer,
Yeah.
who called you
Yeah.
and said, look, I'm interested in buying new launches,
Yeah.
but they missed the boat or something like that.
Yeah.
And they were
No
just
lah, the
jumping
ballot
from
number
one.
no good.
Yeah.
lah. Yeah.
So my question to you is, there's just a whole lot of things to look out for.
Yeah.
Yes, we are in a low interest rate, so they're ready to buy. They want to enter into the new launch market.
Yeah.
But they can't get one. They just keep on going to another.
Yeah.
So I have seen programs where mortgage brokers just swing them like, hey,
Yeah.
the interest rate good, just go and buy this.
Yeah.
Just get a balloting number. You shared something with me. Maybe I would love you to share it with the audience as well.
You see, money doesn't move in one direction, right? I mean, everybody wants to participate in the market in some way. I think new launch is a one way that is time proven, that it's quite fast free move. You can buy into it at different price points. You can buy a smaller unit for a smaller price, 1/1,000,000. You can buy a bigger unit at bigger price points. But once you put landed into the basket, right, the whole game changes. In one of our videos that we did previously, we talked about the barriers of entry towards landed, where it's a high bar, right? We talk about 4/1,000,000 before you can enter the landed market.
Yep.
And now, speaking of what Rama mentioned about clients who said, oh, they want to participate in new launch day or they want to like take advantage of the interest rates for the matter, right? It's still important that at the end of the day that this is a piece of real estate. It is not a position that you just anyhow take. It doesn't mean you miss this new launch because the balloting number no good. You go to the next one means it will perform exactly the same.
Yep.
It doesn't. It doesn't perform exactly the same, right? So you still need to be selective. So experience still counts. In fact, yesterday I saw one article that was in Asia One. They talk about this person said that, oh, they missed the opportunity to buy something, but later on went back to buy the same thing, albeit at a higher price point at a lower floor. Was a new launch. Was at Seneca. So he said when he asked the colleague's agent or colleague's friend who is an agent, right? Obviously, the buyer didn't take the agent's word for it because she felt, okay lah, I mean, you say what you say, I think what I think, right? I agree with that kind of mindset because same for me, right? If I go ask somebody and I don't think that that person is good at what they do, I will just take their advice as noise lah. But if I'm going to speak to someone that I feel has been in the market and understands the industry long enough, that's where experience matters.
Yep.
The experience matters because they've done it multiple times for multiple people at multiple time at different multiple backdrops, right? That they have accumulated a sense and certain instinct towards value propositions.
So basically, what Harvey's trying to say, and what I also subscribe to, is don't be controlled, or don't be worried, or don't put too much attention on these 4 letters. FOMO.
FOMO,
Okay.
yeah.
So there's no such thing as, I mean, there's something that people use to sell it.
Yeah.
But at the end of the day, you still need to do whatever Harvey just said. You need to assess the whole thing. It's not
Yeah.
just about, okay, the interest rate low, I need to enter now.
Yeah.
Yeah.
Yeah. It is still important to choose. It is still important to choose the product. Obviously, if it suits your needs, right, that's a different thing. If I want to buy something that's within one click to the school, that is a very specific need, right?
Yep.
So you're not trying to follow the new launch market because you just want to buy new launch, because you want to buy new launch, you want to look at this product, you like the developer, and it happens to be within that parameter of, say, one click to that school that your kid is going to go, right?
Yep.
That already points you to that direction. That's very clear cut. So that's really down to balloting number and whether you get it or not. But if you're participating in new launch, right, it's almost like one train line. Oh, you missed this stop, I stop at the next stop. I miss the next stop, I go at the next stop. I mean, if you go with this mentality, right, it doesn't mean that past trends equate future performance. It doesn't mean one new launch do well means all new launches do well. So please also do remember that at the table, right, there is some level of experience, there's some level of wisdom that we've learned on our own and together with our clients as well, that we can share. Yeah.
Matter of fact, we have a whole list of new launches in the landed segment
Yeah.
at our disposal.
Yes. Yes.
All right, but again, we had a study on all of them.
Yeah.
Not everything is fantastic,
Yeah.
but it suits certain group of people.
Yes.
All right, so
Correct.
if you are interested in finding out what those are, don't forget to click on the link and contact us.
Correct. Yes. So beyond just about landed market, I think the condo market presents itself as another option. Why we talk about this? Because in a lower interest rate environment, right, I think typically most things, as inflation happens, and most things will generally do well. It is also harder to differentiate what's a piece of good advice versus the other, because when all things move, right, everyone's a champion.
Yep.
And don't forget that when all things come down, right, there's also the chance of it going up again. So it's important to take this current window, right, and do your planning. If you're looking to participate in the market or you're not too sure about what to do next, maybe you can approach Rama and I. You can click on the links below our video description. If you're a buyer, please click on the buyer link, seller on the seller link. And for agents who are keen to explore, maybe upskilling yourself or like being involved in a
I would like to say we are pleasantly surprised after the last few episodes. We're about close to 3-4 agents calling us, and we're making appointments with them to talk to them.
And this is more so to find like-minded people who are keen to like elevate or like be value adding to your clients' journey or portfolios. So thank you, and if you like what you watch, please share and subscribe, and see you in our next episode.